Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be looking at counting candlesticks. This is a very basic, very simple method of technical analysis that anybody can use. If you can count, you can use this. Even if you have to use your toes, you could still use this. So I want to show you how this works. The most important indicator you'll ever have on a chart will be price activity. Secondary will be volume. But in this particular model, you're simply going to be using price activity. The only thing you need to look at, so don't worry about any other indicators for this. The first thing you're going to look at is the overall chart. And it doesn't matter, you can use a daily chart, you can use weekly, you can find these opportunities on any chart. The first thing we do is we look at the number of times any particular direction the price activity has gone, and we can see that back here we've got 1 day to downside, 2, 3, 4. All right, just be normal price activity. We have 1 down day here, 2 down days here, 1 down here, 1 here, 1 here, 1 here, 1 here, 2 here, 1. You guys get the picture, right? 1 here. So ultimately we can see that the average of down days here is about 4 times. It's the highest it's been. However, all of a sudden we get 1, 2, 3, 4, 5, 6, 7 consecutive days to the downside. That's above average. We've already looked at the past and we see that there's not a situation where you have 7 consecutive days to the downside on this chart. That tells us it's above average, and we should be looking for a move back to the upside. It's kind of like thinking of a rubber band that's been extended too far. You're going to get that snapback rally. Even if only short-term bounce before continuing the downtrend, you're still going to see that. So that's an opportunity that you can look for, and this is actually a chart of the SPX S&P 500, where I actually used this model, and it's very simple to call this bottom down here by simply watching for that reversal where you get a situation where the low point is higher than the previous low point right there, and the high point is higher than the previous high point right there. So you know right there it is begun. The relief rally has started. That was a great buying opportunity. Take advantage of that, make good money on that move. Clean this chart up. You can also use this information to get yourself out of a trade before you get that snapback rally, which oftentimes can be rather large and take away a lot of the gains that you have on the table. So if you had been shorting this particular stock and you'd seen and you were holding and she'd been down 1, 2, 3, 4, 5 days, you know you're starting to get long in the tooth. 6 days, it's even longer. 7 days, just get out. The rule of technical analysis is always this: no price activity, no chart will ever move straight up or straight down. It's going to ebb and flow. So when you have a situation that's breaking that rule and you have a sell-off that's just a consistent series of down days or a consistent series of up days, you know that sooner or later that's going to reverse on you. So you can watch for that and trade it. 5 days to the downside, I would consider that still normal. 7, 8, 9, I've seen that happen, but they're rare. If you get into even any more than that, just be looking for a great trade opportunity. The more consecutive down days or consecutive up days you have, the better that whiplash is going to be, that snapback rally. I do not recommend you ever count candlesticks and say you have 7 on the downside. Don't just assume that tomorrow will be the next day up. You can have 8, 9, 13 days to the downside. Extreme situations do happen, and they should catch your attention, but always wait for the trend to change before you jump on board. Finally, I'd like to say that this will work on uptrends as well. If you can count, 7, 9, 8 consecutive days to the upside. However, this chart doesn't show an example of that, and I'm too lazy to actually go get a chart that has that. So just know that it will work both long and short. Okay? Take care. See you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.